Hi, everybody. Welcome back. Now we're in chapter 2, and I have a few problems that I would like for us to do together. The first one is, well, they're all in the back of your book, but the first one that I want to talk about is number 2. So you're probably realizing by now that most of the problems you're going to do, and then there's going to be a few that I'm going to choose to talk about for this video. Okay, so let's look at number 2. So number 2 says Jane is a roofing contractor. Jane's friend needed a new roof but did not have the cash to pay. Jane's friend instead paid with a used truck. So, sorry, I don't have any money, but here, take this truck as a form of payment. She was going to use it in her roofing business. And then they give us some information about how much the truck had originally cost the friend. And then its current market value, it was worth $6,000. Market value is always going to be really important whenever we're transferring goods or services in accounting and for tax purposes. So as soon as you see what something is worth, kind of just like make a mental note. That's going to be an important number. Jane did not actually need the truck, and then she ended up selling it for $5,200 a few months later. So we want to talk about what is the amount of gross income that Jane must recognize as a result of the truck payment and why. So we're learning in this chapter that everything that's transferred to a person pretty much is income unless specified otherwise. And this chapter gives us all the if specified, well, not all of them because there's so many, but a lot of if specified otherwise situations. So we learn in this chapter about a lot of things that could seem like income that get to be excluded from income. In this particular case, Jane receiving the truck as payment is definitely a taxable transaction. Getting the truck instead of money, the IRS views it the same. And the amount of compensation that the IRS is going to view Jane having received is right here. It's the value of the truck, the current market value on the day it was transferred, which is $6,000. Obviously, in the real world, you're not going to have a problem that's just going to give you a number. You're going to have to find ways to determine market value. It's not that hard to determine market value of a car because we have websites that help us do that. So some of these things are not the most straightforward in the real world, but we're going to cover things that are relatively straightforward in this class. All that advanced stuff we can do if we want to be tax people later on, right? So the amount that the truck originally cost the friend doesn't matter for this problem. And then additionally, you can see that Jane sold the truck for a loss. So there's an $800 loss. So she has $6,000 in income that she has to include in gross income. And then because this was a business and then she sold the truck for a loss, she's also going to get to show an $800 loss on the sale of this business item. Okay, so that's it for that one. Now I want to look at number 7. So number 7, Ellen is a single taxpayer. Her employer pays $150 a month, which is $1,800 this year for her health insurance. A lot of us have health insurance that's provided to us by our employers. So this is definitely something that's really good for all of us to know and understand. That's what I really like about this chapter in particular, and a lot of the stuff in this book is a lot of it is going to be so useful in your real life. You're going to find that you're going through your life or going through different situations and going, oh, I know the tax treatment of this. And it seems a little bit nerdy, but it actually can be kind of interesting and kind of fun. Okay, back to business. During the year, Ellen had medical expenses of $3,500, and the insurance company paid $2,000 of those expenses. So do we need to include any of those amounts in gross income? So a couple things. So when a taxpayer receives payment or reimbursement of medical expenses, which is what the insurance company is paying, that is excluded from income. So we don't have to worry about that $2,000 that the insurance company paid for. Good, right? And then additionally, see how there was a $1,500 medical expense amount there that Ellen had to pay out of her pocket. So medical expenses are itemized deductions. So that's just kind of another side note. I know this question only asks what's going to be included in gross income. The $2,000 is not. The difference of $1,500 is going to end up being an itemized deduction. And then also her employer is paying that $150 a month for her health insurance. And that is also not something that needs to be included in her gross income. So that's it for number 7. Okay, let's talk about number 9. So here with number 9, we have Linda and Richard. They're married and they file a joint tax return. She's an accountant for a national airline. She used $2,100 worth of free passes for travel on the airline. So as I'm reading through the problem, I'll just address the items kind of as we go. So in this problem, we want to know what is the amount of fringe benefits that should be included in their gross income for 2018. So is this $2,100 included in gross income? The answer is no. And the reason why it's no is because it's a no additional cost service for employees and their families. So all those people that you hear of that work for the airline and then they get to fly here and fly there for free, that's not taxable income to them because it doesn't cost the airline anything additional to have those people on the plane. The plane's going there anyway, so we don't have to worry about the $2,100. Linda and Richard used $850 worth of employee discount coupons for hotel rooms at the hotel chain that is also owned by the airline. So this is going to be included. So I'm going to type that in there, $850. And the $850 is included because this is a hotel division that's a different line of business than the one that Linda is employed in. Also, we see on here, let's see what's next. Oh, okay. Richard is employed at a state university as an accounting clerk. They're both accountants. How cool, right? Under a tuition reduction plan, Richard saved $4,000 in tuition fees during 2018. So we need more information than just that. So they go on to tell us he's studying for a master's degree. The master's degree part is important. In business at night while he's still working full time. So if you go back to section 2.5 in your textbook, if this is a little bit fuzzy for you, maybe we don't remember because there's so many details in this chapter, right? So this is going to be included in his taxable income, and I'm going to type that in there and then I'm going to explain. So the reason why it's included is because he's working on a master's degree. Had it been an undergraduate degree, he wouldn't have had to include the tuition, but because it's a master's degree and he doesn't work at the university doing teaching or research, then the $4,000 is included. So really the only way that you can get a tuition benefit while working for a university for a master's degree would be if you're teaching or you're doing research. So that would apply to someone like me, for example. I already have a master's degree, so I guess if I wanted to go out and get another one, I could certainly do that. But I work for the MnSCU school system, and within MnSCU, there are institutions that grant master's degrees. And I get tuition reduction by working at this job. It's one of the perks I really like because I love taking classes. I'm taking Spanish this semester, actually. So because I teach for MnSCU, I would be able to not include it in my gross income. So everybody's going to be a little bit different based on their situation. But in this case, Richard does have to include the income. He's not getting an undergraduate degree, and he's not doing teaching or research. And then the last thing is Richard had $30 worth of personal typing done by his administrative assistant. Oh my gosh, that's such a small amount, right? But the $30 of personal typing, that's going to be excluded under the de minimis fringe benefit rule. So the de minimis fringe benefit rule basically just says all this really little piddly stuff like this, it's $30 worth of typing, whatever. Let's not spend our time on that. So total amount to be included in gross income, $4,850. Okay, I have one more problem I want to talk about with you guys. And that is number 16. So there's some different situations to look at that you would have seen in your textbook about life insurance and when it's taxable and when it's not taxable, because sometimes it is, sometimes it isn't. So in this particular example, David is certified by his doctor as terminally ill with liver disease. His doctor certifies that he cannot reasonably be expected to live for more than a year. He sells his life insurance policy to Viatical Settlements for $250,000. And then they go on to tell us he had paid $20,000 so far for the policy. How much, if any, of that $250,000 must David include in his taxable income? Okay, so when there are accelerated death benefits, so accelerated death benefits are like what happened in this situation. The guy has life insurance. He knows he's about to die. A lot of policies, not all policies, but definitely some policies will have these accelerated death benefit clauses where you can go in and say, hey, I'd like to get some of the money now. You're going to have to pay regardless because I'm going to die here pretty soon. But usually they'll negotiate a lower amount. It's not going to be the whole amount. So maybe this was actually like a $500,000 policy or $1 million policy. Who knows? So the policyholder will say, hey, give me less, but give me the money now. And then the insurance company usually is going to be pretty happy about that because they're saving money. Rather than paying the $500,000 or the $1 million soon when he dies, they get to save money. But the answer to the question is accelerated death benefits are excluded from taxable income. So I think that's good. Okay, those are all the problems that I have for Chapter 2, Part 1. I'm going to have some more problems for Chapter 2, Part 2 that you'll complete next week.